Very good afternoon to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I welcome you all in today's 110th CP program organized by WSP of ICI in this council year. And today we are organizing as a 110th program in the form of webinar. And the topic of today's is key consideration in audit of cloud-based software services. Topic is very relevant, very important in these days. And in order to tackle this important and technical topic, we are having with us from our own chartered accountant fraternity, C. Raghav Singhal. On behalf of AASC of ICI, I extend my warm welcome, heartiest welcome to you, Raghav Singhal on this 110th CP program organized by WSP.
Thank you so much.
Before we start formally, it is my proud privilege to share with all of you the brief profile of C. Raghav Singhal. He is a chartered accountant with 10 years of experience in conducting statutory audit under Indian GAAP and AS and US GAAP. Approximately 4 years of experience with KPMG and more than 3 years of experience with Grant Thornton. Currently, he is working as a manager assurance and advisors at Pyramid Services, leading audit for a top CPA firm. He has led statutory audit engagements across multiple industries, ranging from automotive, hospitality, FMCG, retail sector, consumer goods, diversified manufacturing, IT, and healthcare. So, still list is very vast. So, without wasting much more time, I request Raghavji to please deliberate on the topic. And once again, it is our humble thanks in spite of having very family issues, some health issues in the family member. Still, you are here in this level state of mind. So, thank you once again for spending your valuable time and joining this session. So, thank you so much once again, and over to Raghavji, please.
Thank you so much, Anilji. I would like to first thank the AASB board and your good self as well for having me, giving me this opportunity and interacting with the different fraternity members and presenting today's topic. I will start sharing my screen once the presentation is visible.
Yes, please.
Yeah, is the presentation visible?
Yes, yes.
Okay, so let's start. So good afternoon, everyone. Today's topic, audit considerations for cloud-based software providers, which is also known as SaaS providers, software as a service. So we would be going through the considerations in today's topic that we would be covering is firstly overview of the software and SaaS industry in India, which typically talk about why this industry has gained so much of prominence in the last 3 decades. And from an audit perspective, why is it so important for us to be aware of these kind of industries as well? Because after this, we would be covering some malpractices and some audit area considerations. Then we would be moving on to planning procedures, understanding the entity materiality for cloud-based SaaS providers and other planning procedures. We would be covering some key financial terms that you would be seeing typically in the financial statements of software-based SaaS providers. Some risk assessment procedures, some typical risks that are there prevalent in the industry. Importance of ITGC testing in the software industry because it involves a lot of data. Then substantive procedures, some typically which are actually applicable only to the cloud computing and SaaS industries, and then in some key audit matters and the importance of audit documentation. So let me start by discussing some evolution of the Indian IT sector. So in the last 3 decades, if we see that, initially for up to 2005, India was predominantly an outsourced hub, like Western countries, Western companies used to use us as an outsourcing hub where they used to give us or dump work for back-end kind of work, etc. But if you now see in the last 15 years or so, we have as a nation changed from an enterprise servicing model to actually an enterprise solution providing model where we are providing IT solutions, software solutions, plethora of different domains, different kind of software that we are providing, not just domestically, but also internationally. If we see in the last 5 years, the Indian IT sector has actually become a $227 billion in terms of revenue. The IT sector stands here, and India ranks third among the entire world for startup ecosystems, tech startups. So this is how the evolution of Indian IT sector, multifold evolution of Indian IT sector, I should say, has happened in the last so many years. Why is it so critical? From an audit perspective, again, it is accounting for approximately 7.5% of India's GDP. And by 2025, it should be somewhere around 10% of India's GDP. The National Association of Software and Service Companies, NASSCOM, everybody knows this body. Uh, it actually projected that the India's IT revenue touched to $227 billion in FY22, just completed FY22, which is a 15.5% year-on-year growth. As I mentioned earlier, the Indian software industry is actually now not just operating domestically, but actually exporting to different parts of the world, which makes it even more, I should say, critical from an auditor's perspective to report and to check and to audit the numbers, the financial statements properly. So if you see, the exports are expected to be around US dollars 178 billion in FY22. So this is the criticality. Now, if I talk about typically an IT industry or a software sector, there are a lot of models. There are platform as a service. There is one subject also that ICAI used in the old course, ISCA. So there, there was a topic on cloud-based computing and different types of platforms. So if you know that the IT sector is divided and it contains all kind of software providers, on-premises software providers, over the shelf, like like antiviruses that we buy, Tally that we all chartered accountants used. So what we are going to cover is a cloud-based SaaS model, right? So what typically a cloud-based software as a service provider means is that, so let's say that if I have a HR software which I'm providing to companies that are using for their employees. So the software is based on my own servers, my own created software, or probably I'm taking some hosting services from somewhere, but it is somewhere on the cloud, which can be accessed from mobiles, devices, anywhere. And this is some technology that is actually growing leaps and multi-bounds in India in the software sector. If you see, I've tried and incorporate different news articles, not just I've incorporated, try to, put news articles so that it is actually visible that it's everywhere, right? So if you see, the cloud market in India is expected to go threefolds to US dollar 7.5 billion, threefolds, it's 300%. With the newer technologies like cloud computing and IoT technologies, a lot of listed companies are now entering into these kind of, one of the listed companies, Happiest Minds, it's in the public domain. They are now using cloud computing and IoT as their main source of revenue. So this actually has made all these, this industry so critical from an auditor's perspective that earlier, typically we used to think that software is not, to audit software industry or a SaaS industry is not that difficult. It is still not difficult, but earlier it was not considered that critical. Manufacturing, automobile, all these sectors, healthcare, these were taking all the prominence in audit engagements. But now a lot of firms are actually getting into these software engagements now. So as auditors, some common malpractices that we should be aware of. So when you go and start as an engagement team and go and audit a software SaaS provider, what are the common malpractices that you would probably see? So the first one is enjoy tax holidays, concessions, and privileges on property allotment. So as you know that there are many income tax, indirect tax benefits given to software exporters, tax holiday periods are given and all. So in those periods when entities typically think that they do not have to pay tax to the government, they are very well aware, and there is a very high chance of them manipulating their numbers and revenues, because anyway they don't have to pay any tax. So for their stakeholders, users, so there is a very high chance of manipulation. People are assets, headcount. So like a normal manufacturing sector, we all know that it's a very asset heavy intensive sector, right? A lot of assets, fixed assets are there. But in software services, there are the main asset for a software company is their people, right? And that is why the headcount, the employee cost you would see typically in a software SaaS company is huge. It's absolutely huge. It's one of the major numbers in their balance sheets and P&L accounts. So there are high chances of manipulations in those areas as well. Again, in software, in SaaS providers, you will see that there is a concept of bench appointment where people would, where the entities actually keep a bench strength, because on projects, if the entity has allocated, let's say 5 resources and one is not available, then the work cannot stop. So there is a bench strength. So that bench strength actually exists is a very important thing to check for an auditor. Then self-reported metrics like billing rates to related parties. Often in these sectors, there are a lot of related party transactions, which both domestically as well as internationally. So the auditor must check about what the billing rates are being done, etc. And then export incentives, as I mentioned with tax holidays, similarly export intensive, because if I am a product producer and if I'm exporting, I have many multiple ways to check that, because I can check it from bill of lading, the quantity that has been loaded in a ship, or any sort of other evidence that I can use. But when you are exporting services, there is no quantity. So it is typically actually in the nature of an intangible. So an auditor must obtain from the entity what different forms they are actually filing for export declarations, and must audit those. Some of the transactions where there are a material scope of misstatement, like I mentioned, transactions with related parties, they are not recorded with arm's length. I have personally encountered many such instances while auditing SaaS companies where the markups or the profits are not in line with what they would probably be giving to a third party. Foreign exchange exposures. Majority of the software SaaS companies in India have international operations. And when international operations are there, foreign exchange exposures become really key from an audit perspective. Again, revenue models of these companies, which we will also discuss in later slides, are not exactly the same as you would see in a normal entity. So that's why the revenue recognition is also a place where there is a scope of misstatement. Now, when we move on to the audit of a cloud-based entity, and so what do we do as a start, or let's say for any entity, the first thing is understanding the entity and the environment. So typically it is very important from an audit perspective, because till the time an auditor or we have a background of what the entity is doing, where it's operating, we will not be able to plan properly our audit. So when we understand an entity, it involves typically to understand what kind of industry is the software provider in. Is it a cloud-based SaaS, or a platform as a service, or a infrastructure as a service entity? What regulatory and other factors are relevant, various IT laws which are probably applicable on the entity. Geographies in which these entities are operating, because like I mentioned, software SaaS providers you would see are actually all over the place. Indian software SaaS providers, there are Middle East, US, Western. So they are actually providing in all geographies. So one must be aware on what geographies they are operating, what are the IT laws and compliances of those geographies. Entity selection and application of accounting policies. And on the previous point, I think it is also important if to gain audit reports from the local auditors of that geographies to understand whether, because as Indians, we may not know what are the framework or what are the compliances in the other geographies. So they may have local auditors doing for that local regulatory body. So it's very important as an auditor to gain all the audit reports if you are auditing a group company which has different geographical presences. Then entity selection and applicable of accounting policies. Understanding the nature of transactions with related parties. There are a lot of related party transactions. One needs to understand what are the nature of related party transactions. Then these software entities are actually facing a lot of competition in the market. And that can actually also pose a challenge on the ability for going concern, because you see there are a lot of mergers and acquisitions in this space. every second or third day, some IT company is acquiring some smaller IT company, right? So an auditor needs to be aware of those aspects also if it's happening in the entity that they are auditing. The ownership and governance structure of entity, including the way it is structured and finance. Typically, generally, if you see SaaS providers are closely held companies, there will be a couple of promoter group, 3 or 4 people member. And it is very important to understand because like one of the engagements that I was doing, there were unnecessary dividend payouts to those companies because A, they were not, that was not a very large company. And B, it was a very closely held company. So it is very important to understand what is the ownership structure of the company and what is the governance structure of that company. And then, of course, risks associated with the businesses, the what is the customer base of the entity, the type of arrangements with its customers, etc. Some other planning procedures that we actually miss out doing audit is a background verification of the promoter group. Now, what does that mean? So larger entities, everything is there in a public domain, right? The listed entities. But these kind of companies, SaaS, cloud-based software provider companies, these are typically not that large in size because it's still a concept that is picking up in India. Majority of the companies that we would be auditing or you would be auditing would be small to medium size. And it is very important to do a background verification of the promoter group because this actually gives you the very first instance of whether to even accept an engagement as an auditor or not. How risky is that engagement? So once you can engage a third party for the background verification, or you can do it over online. But in case you find any hits for background verification of the promoter group, immediately take appropriate action regarding this. Independence procedures along with international relationship check. Now, what independence procedure means is that we as auditors are actually, or our firm is actually independent of the client that we are auditing. Why I have mentioned an international relationship check? Like I mentioned, these industries, SaaS-based cloud service providers, since they are on a cloud, there is no geographical limitation, so they are operating in a lot of countries, right? So if I am in a firm, let's say X firm, and I am auditing a company which also has a subsidiary in Australia, and I have a firm in Australia, a sister firm in Australia, but they are doing some other engagement work, let's say tax filing for the Australian subsidiary. So as a firm, I cannot accept that engagement to audit even in India. So that is called an international relationship check. And once, if there is a hit in international relationship check, as auditors, we must see the ISBA guidance on International Code of Ethics as well as the ICI guidance on this. Any corporate announcements made by the company is very important. Fraud risk assessment is very important in these type of entities. And the reason is that, again, these are very small, medium-sized entities and a very closely held entity, right? So the chance of happening frauds increase multifold. So we must see that whether the management has an opportunity to do frauds. Opportunity means having probably weak internal controls, or there is a poor tone at the top, like the entire tone at the top is not correct in the organization. Or there is any incentives there to the management, like bonuses, investor expectations. So these kind of entities, they generally have a lot of bonus payouts during the, not just one. So in normal companies, you would probably see one bonus payout typically at the end of the year, or probably 3 months after the year end. But in these kind of entities, because it's a IT software industry where there is a lot of attrition, there are a lot of bonus payouts during the year. So one must actually see whether there is appropriately the bonuses have been computed or not, or has been fraudulently paid out. Investor expectations, then personal incentives could be there. And the overall attitude can also be wrong of somebody that you have inquired. So fraud risk assessments generally happen through inquiries. And if you are inquiring sitting across somebody from the organization, and you think that the attitude of this person is very negative towards the company, then there should definitely be some skepticism from the auditor's end regarding these. Review of various minutes or other export reports like internal audit reports or company secretary report is very important. And then the measurement and review of entities' financial performance. So these are some planning procedures that you must do in these kind of entities. And now, materiality considerations for cloud-based software industry. So as we all know that materiality is actually the base of audit, right? So when you have something immaterial, we tend to leave. So it is absolutely important for an auditor to select the right level of materiality based on the absolutely appropriate benchmark. How do you select a benchmark? A benchmark is actually selected based on the users of the financial statements. Now, these are medium companies, and obviously public at large will not be the users of these financial statements. So generally we see the benchmarks as PBT and total revenue, and a general percentage range for an overall materiality level would be, if you're taking a revenue, it would be probably 0.25 to 3%, and if you're taking a PBT, it would be from ranging from 5 to 10%. There are a lot of startups in this industry coming every second, third day. Obviously they will not have revenues, at least for the first year or some months. And if you have been appointed as an auditor of those companies, so it's important to select expenses as the benchmark, because they would not have any revenue. Moving on to the how financial statements actually of a cloud-based software entity would look like. So if you see there, from revenue from operations, there would be some sort of revenue streams like subscription services, hosting revenue. So subscription services is basically on a per user basis. So if I have an HR software, and if I've given it to a company, so the company can actually pay me on a per user basis or a per month basis. So any kind of subscription model would be included here. Hosting revenue, if as a software company, what typically they do is, say they develop their in-house softwares, but they also have to host it somewhere, right? So Google hosting platforms are there, Amazon Web Services are there. They themselves are also are considered a part of the SaaS industry. But if there is some company who is actually making a software in-house, developing a software in-house and hosting it, so the revenues, or the Amazon Web Services is actually earning revenue from hosting services, advertisement and marketing services. As a SaaS entity, there may be many revenues that an entity is earning by playing advertisements or of various other companies. So those are some typical revenues that you would see. Sale of license. So if I have a big company, I may have some part of my business where I am actually selling license softwares basically, right? So those can be some revenue streams. Sale of IT solutions, and then revenue from additional services. So when we are actually auditing these entities, we would see that the revenues, so they have developed, an entity has developed a software, right? But with that, there are multiple other revenue streams or additional services that the entity earns, like implementation services or a constant updation services, upgradation service revenue, or probably data retention services. So these are some additional revenue streams that can be seen in the financial statements. Cost components, content development expenses. It is very common in software industries that they are developing their own content, their own softwares, their own platforms, their own screens, their own the entire infrastructure is there. So their development expenses can be there. Customer support expenses. So once an entity has if I have subscribed to some software, so the constant customer support expenses would be there from their end. Outsourcing cost, internet, obviously it's no brainer that internet and other online expense costs will be there. And then huge payroll costs would typically be seen in these kind of industries. And research and development costs as well for their softwares and existing products. Balance sheet items, if you see that in PPE, intangibles, ROU will definitely be there, right of use asset, because these entities generally at the starting phase of about a year and two, they are not able to buy their own offices. So they typically lease out buildings and equipments and etc. to use. And therefore, it is very important from an audit perspective to understand the lease agreements and to see that whether the proper recognition of right of use assets have been done in the books of accounts and lease liabilities or not. The other assets you would see is computer hardware and their own very computer software developed intangibles. Investments in equity instruments, convertible preference shares, and these may also carry a risk of impairment since these are small entities. Trade receivables would definitely be there, and specifically an auditor has to place reliance on trade receivables from related parties because these entities are generally interacting and transacting a lot with their group companies. So definitely this is one of the key audit areas that that an auditor must place reliance to. Other assets, unbilled revenue, advances, these are very common. So if if my customer is taking my subscription for 3 months or 6 months, so generally there would be an advance and a deferment of revenue. So unbilled revenue and advances, there are, you will see these kind of balance sheet items as well. Deferred tax assets, shareholders equity, obviously borrowings would be there. Startup companies, they take a lot of funding from domestic banks, institutions, VC, other funds, etc. So there you will see a lot of fundings there coming in, and the application of those funds would also typically be an important audit area. Then liabilities, trade payables, deferred revenue, payable to employees, these liabilities, etc. So these are some common financial statement heads or transactions that we would typically see in a SaaS industry. Now, moving on to some important risks that are there and auditors' responses. So if the financial statement area is revenue, the risk assertions are existence and valuation. As I mentioned earlier, that there is a major risk of revenue recognition in cloud-based service providers because there are a variety of revenue channels. There may be on subscription revenue, there may be per user revenue, per transaction revenue, then there may be additional revenue streams like retention services, upgradation services, implementation services, etc. So there is no fixed model in these type of industries. There could also be SOW based, where there is a statement of work and it is on the based on the milestone model. So these are basically, since they involve a lot of channels, revenue channels, so it's very important for an auditor to understand all the revenue models, review all the contracts with major customers for important contract terms, identify all performance obligations in a contract, which we would also be talking a little ahead. But if typically, briefly, if I were to tell you, if a SaaS provider has not just provided a service but bundled it with implementation, upgradation, and retention services, then how will you basically how an auditor should ideally see how many performance obligations are there? So that is also a very important risk that needs to be covered. Payroll, HR, employee compensation, again, a very important area, one of the biggest balance sheet P&L items or number-wise in a trial balance, if I say. So some typical risks that or wrongdoings that we see in SaaS industry is that the increments may not be authorized. So since there are so many employees, so many increments happening, going, coming, iteration is there, joining is there. So an increment risk is there. The leaves. So now, these industries are still, a lot of them, companies are still operating on a work from home model, 100%, 80%, or a 2-day model or a 3-day model. And therein, it is very important. It's very risk. It's a very big risk for an auditor to leave, the timesheets and the leaves that employees are taking without approvals and without probably logging in the portal and actually taking proper approvals for leaves and filling their timesheet. So work from home model, the auditor must be absolutely vigilant about these things. In the absence of restrictions to salary structure of the employee, the salary structure may be modified. This has also, I have personally come across this instance in one of the SaaS providing companies where because of no proper restrictions in the HR department, the modification had been done. So the auditor must actually see that the right to access the salary structure of employees is maintained in Excel and software is available with only limited authorized personnel only. So the HR people or probably the HR head of the department should only have an access to these things. Due to high attrition rate, prevalent, the company might send incorrect data for actuarial valuation. Now, so when we are doing an audit, obviously, one of the expenses in a employee compensation is gratuity, leave encashment expense, and provision, right? And that is done by the actuarial. And so for that computations, the entity sends the data to the actuarial to compute. So generally, because there is a lot of employee com, a lot of movement, even the teams there struggle with handling so much of data, and they end up sending incorrect data for actuarial valuation, which can actually result into an incorrect provision for gratuity or provision for leave encashment or the expense. So the auditor must be vigilant about that as well. Then expenses, there, since these are small and medium enterprises typically, and they do not have too many processes or controls in place. So in terms of expenses also, there are a lot of instances where higher cost items are purchased instead of low cost items. So auditors must ensure during their control procedures that quotations have been the company has asked for proper quotations, and only the best quotation has been chosen. Unauthorized claims in absence of defined policy. So there are a lot of employee reimbursements that go to the employees without proper approval process. So this also has to be taken care of. Inaccurate and unauthorized rent payments are there. You would still see that there are a lot of wrong invoicing also for rent payments sometimes in the SaaS industries. And the proper recording and treatment of rent is also not there, because they do not have the expertise of actually understanding accounting standard and doing the proper straight lining or ROU recognition. So this also needs to be taken care of. Then travel is something that is very prevalent in the SaaS industries. You would see the leadership group or the management group, or probably a little lower also, that traveling a lot for business development purposes. So the necessary approvals should absolutely be there. The auditor should ensure on sample basis that reimbursements are as per the policies. Somebody who is actually being reimbursed and is not entitled to is also a great risk in these kind of industries. Period end processes. Now, why is this important? This is actually important because a lot of SaaS companies are operating on a cost plus model. And when you are doing a cost plus markup, it is essential that all the expenses or all the period and balances have been complete. Otherwise, the revenue will not be correct, right? And then there are other reasons as well. The foreign currency balances may not be accurately reinstated. There are a lot of foreign currency transactions, and the period end, it may not be absolutely reinstated. So the auditor must ensure that it is as per the applicable standard. The exchange rates are used, the period end exchange rates, and all the balances, foreign currency balances, are reinstated to the year-end rate. BRS is something that is commonly missing in SaaS industries. An auditor must ensure that there is a proper bank reconciliation statement that is being prepared by the management, and not just being actually prepared, it should also be reviewed by somebody. There should be a maker checker concept. Otherwise, then this control is actually of no use. Then period end write-offs are not appropriately computed or approved. This is also a risk, that the receivables or the payable balances, when the proper provisioning is not done in these kind of industries. One of the typical financial statement areas in intangible asset capitalization. So one of the major risks prevalent in the software industry is overcapitalization or undercapitalization of software development costs, because majority of the companies are actually developing in-house softwares and then providing it as a service. So it is so the overcapitalization or undercapitalization is a big risk. So the auditor should ensure that it is as per the intangible asset standard, Ind AS 38, and should actually ensure that the proper capitalization has been done in the books of accounts. Now, some other key risks associated with the cloud-based software industry. Like we've discussed, that talent risk due to huge demand for globally and attrition. So typically, if you see that among the IT companies, among the software companies, among the cloud-based industry companies, the talent keeps on shifting on a huge, there's a huge attrition during the year for the talent. And this also is a risk from an existence point of view. So if you are auditing such kind of a company where there's a huge attrition rate and it is operating in this industry, then the auditor must obtain an understanding from the management that how they are actually planning to mitigate this risk. How are they actually planning to retain their talent? How are they actually planning to retain their key managerial persons so that this does not actually pose a risk as a going concern risk? And this is also an existence risk in these kind of entities. So the auditor must do existence procedures as well. Like, for example, on a sample basis, the auditor can actually call some of the employees to actually see and ask their designations and since when have they been associated with the company, in what role. Then business model challenges. They are rapidly evolving. Technologies are changing these days. So every 3 months, the technology or something new is coming. Every quarter, every 6 months, every year, the technological changes are there. So the auditor, so there is definitely a risk of obsolete technology and going concern. So the auditor must ensure that the company is actually having procedures in place to tackle these volatilities. Then there is currency volatility. Since we are operating these industries are operating in a global environment, so definitely there is a lot of volatility in the currency markets. We are seeing every day that the rupee versus USD or versus Hong Kong dollar or pound, etc., they are so volatile. So it is very important for an auditor to understand this. Because of these things, there could also be some hedging transactions that are there in the company, that they are actually hedging their currency risks. So that also becomes a key area for an auditor to test the hedging contracts on a sample basis and actually make sure that those contracts are not only for speculation purposes, but are actually for mitigating the risks. Then data integrity is a big issue in the software industry, SaaS industries, because there are so much personal data of users with these companies that it is absolutely important for these kind of entities to have appropriate controls in place and the auditor to make sure that these risks are taken care of. So regarding these, when we are doing control testing, if we are following a control testing approach, there are two types of IT controls that typically auditors test. One is ITGC and one is ITAC. ITAC is more at a application control level or at a financial statement caption level. Like, for example, if the depreciation is being computed by the software automatically. So if the IT team, the audit IT team, if tests the depreciation computation, then that is ITAC. But in these entities, more than ITAC, it is actually important to test the ITGC controls. ITGC are information technology general controls, again, only and only because of the data integrity issues. If these companies, because so many ransomware attacks, so many malware attacks, so many IT hacking attacks keep on happening on the networks every single second in these type of industries. So it is very important for an entity to ensure the integrity of the data, the user data. If the data is leaked, there can be many legal implications on the company. It can also actually impact the going concern of the company. So from that perspective, ITGC testing should definitely be done in these type of industries. So some risks related to ITGC is that user access is provided without appropriate prior approval. So these are some findings that in my experience also, and generally also, that we see in these kind of industries, that user access is actually provided without prior approval. So anybody and everybody has an user access. Terminated employees are not removed in a timely manner. They keep on continuing. They are allowed to access WhatsApp groups or the internal systems way beyond their termination date. Access to the system is restricted through strict passwords and parameters. There may be situations where the very generic passwords are kept for system access. Unauthorized changes are made to applications, databases, and networks. Somebody may just log into a system and change the coding, or some software that will actually provide a downtime to users, which will actually not, then again, the legal implications, and again, all these, the change starts. System backups are not on a regular basis. It is very important for such entities to have backup controls in place. External access to the system is not appropriately restricted. Data centers are not designed to prevent damage. So when, and so, when the, so you will typically not do these kind of tests. These tests would typically be done by your IT team, the audit IT team that we engage. But I would still like to mention that the end responsibility remains with the audit team, the main audit team, right? So if there are ITGC findings, it is, it's not just that the auditor has received the ITGC finding or the ITGC work paper, and with some findings, and the ITGC team has written some solutions to it, and that's okay, and we attach it in the documentation. No, it is the duty of the main audit team to understand how their approach, the approach that they had taken for general controls, IT general controls testing, what all findings they have done, and whether those findings are actually a significant deficiency or can be passed by the auditor, or what the company is actually responding to those findings that has been done. So the end risk and responsibility still remains with the main audit team. Moving on to some substantive considerations in these kind of industries. So firstly, just want to quickly discuss some revenue models that as auditors you will come across these industries. One is a time and material based billing, where billing is done actually on the basis of time spent by the people on the project, which could be hourly, daily, weekly, and depending upon the arrangement of the customers. And only because of this, they keep a bench strength also, that we had discussed in the starting. Then there can be milestone billings, that as per the statement of work, different phases of different softwares is reached, and the entity can be billing on milestones. So basically it is based on the achievement of a milestone, which could be a feasibility study, business analysis, or a development, or a go live milestone. Then licenses sale, like we typically buy antiviruses and Tally. And there can be some other revenues like AMC charges, or an outcome based pricing, in a transaction and volume based pricing. So in a cloud based software industries, this is one of the most prevalent type of billing, a transaction and a volume based, wherein it's per user, or for a number of transactions, etc. And then there is a cost plus markup billing done. So when I talk about revenue in the cloud based, it is, I think, the one of the most important things, most important areas to audit. And the reason is that there, like we discussed multiple of times, that there are many types of billing and models done. So when you have to keep evaluate the type of contracts versus the standard accounting standard that is applicable to the entity. So obtaining contracts entered by the entity. So what should you do as an audit procedure? You should firstly obtain the contracts, all the major, obviously it's not possible to obtain all contracts if there are a lot of customers, but you should typically try and obtain all the major contracts entered into by the entity with its customers, and understand the key terms of the contracts. Sometimes in these kind of industries, typically we see that there are no such as such a contract with any customer, but there would be a master service agreement, MSA, in place in conjunction with various order forms. So there would be a master service agreements where there would be clauses at the master level, at the general level, and then there would be order forms that would be actually explaining what work is allocated to the company, or what performance obligation the company has to perform. So identifying the model of revenue, like we discussed, per user based or a per transaction based. So there can be models like, for example, if there is an entity which is into the exam proctoring software. So generally, if there are some entities that I have encountered which are into this software service of exam proctoring, online exam proctoring, because all these days we know all the exams were happening till the last 1 year on online basis. So there the universities or the schools or any they were either typically obtaining that software on a per student basis, that is a per user basis, where the number of exams were variable, and or a per transaction basis where the number of exams were fixed. So somebody can take it for, like, let's say for 15 exams or for 25 exams, etc. Then there can be single month contracts, there can be multi-year contracts, there can be post-paid contracts. So in these industries, actually what happens is that the auditor actually has to see the pattern of revenue recognition. Once the performance obligations are identified by the auditor, the next step comes as how the revenue is being recognized. There is no specific guidance written under Ind AS 115 regarding this, but if as an auditor, if you search on the online, so much of material is there by so much commentaries and so many interpretations of various firms that are there. So in these kind of industries, if it's a per user based model, it is generally on a series basis. So what a series base means is, like, if there is a 3-year contract, and the number of users are increasing each year, and the billing fee is also increasing, so we would streamline it and record it equally on the each year. We would not actually, it's the same concept like rent straight lining. And why do we do that is because the performance obligations in these kind of billing models per user basis is actually on a same pattern of transfer. There is no difference in the pattern of transfer, and that is why it is very important for an auditor to actually understand what exactly is the model of revenue and what is the pattern of transfer. If I talk about per transaction based models, so if somebody has, let's say, contracted for 30 exams in a month to do, those 30 exams can happen in a particular day, that those 30 exams cannot happen so in the entire month. Those 30 exams can happen on the last day of the month. So in those kind of transactions, generally the guidances say that the revenue is to be recorded after the performance obligation has been fulfilled, or after the transaction has been done. Similarly, in terms of postpaid contracts, this is the method of revenue recognition that we follow. So, like I'm saying, it is very important to understand the model of revenue in these industries. It is very important to identify what the performance obligations are there. Like, so there could be SaaS services, there are implementation services, upgradation services, then PCS services. PCS is a term that is typically used in these kind of industries for post support services. Once you have access to the software, then post support services, and then data retention services. Now, why I've written data retention services is that one of the engagements that I was there, I was auditing, there was no such thing as data retention services. But when we actually read the MSA, there was something written that that the entity is saying that the data that they have collected would be retained for 5 years, and the customer can access it as and when feasible, right? So if I explicitly, if I see this is not a service, but then if I see it from a standard perspective, yes, it is absolutely a service. And that is why it is very important to obtain the contracts, read all the terms of the contracts, and then see what the performance obligations are there. So if an entity has an obligation of retaining a data, so definitely it is a performance obligation, right? So there can be legal actions against it if the entity deletes the data. Similarly, we need to see whether there are specific number of services, like I mentioned, 30 exams, or probably a user-based services for 4 users and unlimited number of exams, proctoring exams. So in that case, a series guidance would be applicable. Then when we talk about these entities, there is a very, very strong chance of the auditor encountering a variable transaction price. Now, what do I mean by a variable transaction price? So generally what happens is in postpaid contracts, if I am obtaining some service, but I have to pay it on a postpaid basis. So the service provider does not know how many users would use it, or the service provider does not know how many transactions would be there in that particular period, right? So the standard actually says that when there is variability in terms of transactions or users which are not fixed, then the entire variable the consideration has to be estimated right at the inception of the contract. right? So that is something that is very prevalent in this industry. Of course, the standard and the guidance also speaks about constraining the variable transaction price in cases where it is actually not possible to estimate a variable transaction price in these cases. So the standard talks about certain parameters or instances where the auditor can actually constrain the variable estimation and move on to a fixed price estimation. Similarly, you would see there are certain contracts where there is written that the service provider can unilaterally increase price with a 60-day prior notice or a 65-day prior notice. That also is actually a kind of a variable consideration, because since there is no consent required of the customer, and so the entity can anytime actually increase the price unilaterally. So that is also a type of variable consideration, variable transaction price. And then once all the transaction prices are identified, whether variable or fixed, and the performance obligation, and of course we need to divide it on the if it's not bundled all the performance obligation, then we need to allocate the transaction prices on the performance obligations. Again, in these kind of industries, SaaS-based contracts, the auditor should place great reliance for testing the deferred revenue, because we all know that when we obtain services like, let's say, for example, a Netflix service or an Amazon service or a Google Drive service or a HR portal service or any kind of services that we obtain online, there may be instances where we are paying for 6 months or for a year or for probably 2 year or a 3 year maybe, right? So in those cases, it is very important for the auditor to see that the revenue is being properly deferred in the books of accounts. And obviously on postpaid contracts, unbilled revenue comes into the picture. So this is also a very important area for the auditor to see in revenue. If the billing model is based on a time and usage basis, the auditor should perform procedures to ensure that the correctness and completeness of the base data is used for billing to the customer. I think this is self-explanatory. Then some other audit procedures that generally we should do in software SaaS companies is that these companies are a lot of these companies are actually operating with very limited customers or only related parties. So if they are operating with very limited customers, there is a great risk of going concern, and that is what should actually be assessed by the auditor. Also, transactions with related parties should be assessed by obtaining TP study reports, because generally what you see is that the markup is being charged, or probably the margins are being charged at, let's say, 15%, but the TP study is coming in a range of 12 to 14%. So that needs to be inquired into. That can have tax implications later on. A gap testing should be performed for revenue invoices to understand any fraudulent invoices and cancelled invoices. So what exactly is a gap testing? We should obtain the entire list of invoice numbers sequence wise that was issued during the year and see for any gaps between them or not, because there are a lot of instances that you will see in these companies that the invoices have either been cancelled or fraudulently been hidden somewhere, or they actually are not, they were issued initially, but then from the listing they were removed. So those only will be you can catch it by doing a gap testing procedure. Customer refunds are very prominent in the SaaS industry, in the cloud-based industry. So once we all subscribe to something or we take some service, some software service, it is very common for us to then cancel the subscription midway, right? So the auditors must ensure that all the customer refunds are correctly and accurately calculated on a pro rata basis and then paid out as well. Then operating costs and expenditures. It is very important to see that the operating costs and expenditures in these kind of entities have been appropriately taken to the P&L account, and there is no other cost which actually needed capitalization which has been taken to a P&L account. It is very important. Further, there are a lot of companies operating in this industry, cloud-based, where they're operating on a cost plus model. Now, cost plus means is that there is no contract for revenue, but the contract, even if it is there, it only says that we will give a 5% or we will charge you a 7% markup on whatever project cost related to your assignment or your engagement. So in those type of models, it is very important for an auditor to understand that the expenses and the costs are correct, because only when the expenses and the costs are correct, then there is only a percentage which needs to be applied and the revenue gets computed. Revenue is not important in these kind of arrangements. When entities have these kind of arrangements with their customers, revenue is not that important. It is actually it does not have a fraud risk. We do not take it as an inherent risk. We do not take it anything, right? But expenses then become a major risky part for the auditor. Similarly, employee benefit expense, like we've already spoken, that since SaaS industry is a highly employee heavy industry, the auditor should do special procedures to ensure existence of employees, like calling procedures on a sample basis. The auditor should also do, because there are hundreds and thousands of employees and so much of payroll cost, it is not feasible for an auditor to check all the costs. So we do a payroll rationalization procedure, which actually means that developing an expectation on the basis of the last year payroll expense cost, and then inquiring into what are the differences. So if I take the last year payroll cost and then take an average employee payroll cost for the current year and then multiply it by the number of employees that we have here, along with adding the percentage of increment that may have happened, we get an expectation. And 90% of the times you will find that the expectation and the actual number are not matching, and it is only because of high iteration rate. So the reasons must be inquired into, that why is the the actual payroll expense for the year not in line with the rationalized or the expectation that the auditor has built. There may be plethora of reasons. High employee members may have left, but low paying employees may have joined, or vice versa. So because of that, the expectation can be skewed. So that's very important. Typically, these entities have multiple bonuses pay out throughout the year. Like we mentioned, that there are so many incentives and so many bonuses paid throughout the year, that as a part of audit procedure, the auditor must recompute these on a sample basis for some of the employees, and then take a call whether these are accurate or not. Data sent to actuary is a must check for the auditors, along with carryover leaves for sampled employees. So when we see expense for leave encashment, the auditor must actually go back into the system and ask the management to provide some screenshots for some sample employees, showing that actually the system takes the leave that the actuary has taken, the carryover for that particular person, or the data that has been sent to actuary is actually matching with the system screenshot. PPE and intangibles become a very important part of SaaS industries, and the reason is only one, that most of the software SaaS cloud-based industries are actually producing in-house softwares, and when they are doing that, it is very important for an auditor to make sure that the intangible asset or the capitalization has been appropriately done. The research phase expenses all should go into the P&L statement. It's only the development phase expenses that should be capitalized. And development phase also, there are multiple, the standard provides you a guidance of multiple points that to understand. But if I were to talk about a couple of main points, is that the collection, that it should be, you as an auditor, you should be able to estimate that yes, the software that is being developed is able to provide future economic benefits, and the intention of the management is not just to keep on researching but to actually developing the software that they are doing, right? So these two things, if they are present, then you can capitalize the development phase expenses. There are many times that these industries actually capitalize post go live phase expenses. So once the software is live and it's operating, and then they make some amendments or upgradations, so that is the time that those expenses are also actually capitalized. But that should not be the case. The case should be that it should be expensed off unless and until it is actually providing an enhanced functionality. So if there is a, let's say, a portal, and then let's say if there is Make My Trip, for example. Make My Trip is a cloud-based portal that is being provided to book tickets and all. So if the hotel portal has gone live, and after 6 months the flight portal goes live, so they can capitalize the flight portal as well. But if there is only some amendments in the hotel portal, they cannot capitalize that, they have to expense it off as per the standard. So these all considerations must be taken care of. Again, there are a lot of patents also and copyrights in these kind of industries. The auditor must ensure that the various patents and copyrights have been appropriately capitalized and no cases of infringements are pending on the entity. Another important substantive area is an impairment assessment. So since SaaS industries, they operate in a highly volatile technological changing industry, the auditor must carry out impairment assessments on the PPE or capitalized softwares if they've lost their relevance. If the technology has basically changed and the auditor is again and the entity is still operating on previous technological softwares, so the auditor must assess the impairment on those intangibles. Then the software industry actually also gets some taxation benefits. We all know that the Income Tax Act 1961, there is a section 10A for SEZs and all, where they provide a tax-free holiday period for some time if there is an export of software services from a free trade zone. So those kind of benefits, when you see in financial statements, you must actually as an auditor must go into seeing whether the incentives have been properly calculated and appropriately computed or not. Please involve tax specialists if required, because obviously we are into specializing era, and somebody who is specializing in audit may not have that kind of specialization in tax. So involve in-house tax specialists, or you can also involve third-party tax specialists just to gain an opinion. Some other taxation benefits like STPI park. So software technology parks are there where, if you are exporting softwares from there, there are a lot of import incentives that you receive vis-a-vis that. So those also have to be inquired into properly and see that all regulatory filings have been done, all the forms have been filled, and, whatever details the entity has provided is matching actually with the books of accounts. Receivables with RPT. Generally, while auditing, the recoverability of receivables, it is with related parties, and especially when there are small and medium companies, as auditors, if the management says that yaar hamari hi to related party hai, hame paisa nahi milega kya? So those verbal confirmations should not be placed reliance onto it. They are not sufficient. Auditor must ensure that a proper confirmation is obtained from the related party, be it an international related party or a domestic relation related party, and not just obtaining the confirmation. When any kind of confirmation is received, it is absolutely important for an auditor to actually check the personnel who has given that confirmation, and also check the email address from where that confirmation has come. I have personally experienced a case where there was a confirmation that was not coming to us, and the audit committee was in a couple of days, and we were absolutely behind the management to get us that confirmation, otherwise we will not sign that financial statements. And when the confirmation came, it was from a Gmail address. So it's not possible. It has to be an official email address to get that confirmation, right? So we took it as an adjustment in the books of accounts. So all these things are very important. And related party receivable confirmation is very important from a SaaS perspective. Now, procedures on foreign currency balances. Since there is a lot of foreign currency exposure and a lot of dealing through the entire geographies, and multiple countries that the domestic companies are dealing into, auditors should ensure proper reinstatement of year-end balances, like we discussed earlier also. When these companies are getting remittances from outside or from their own related parties, an auditor must verify FIRs. So there is a foreign inward remittance certificate as per the FEMA law that is available to these companies. You must, as an auditor, ensure that these FIRCs and test them actually on a completed basis to see that whether the actual remittances exist or not. And then there are definitely other considerations, FEMA guidelines and RBI guidelines with respect to foreign remittances that the auditor should check. So like, for example, there may be some timeline, a 9-month timeline on the form that the, when if you've exported something, the money should be repatriated to India or should be, come to India within 9 months. So those kind of guidelines must be adhered to. The auditor should do a testing around this as well in these kind of industries. Now, seeing this, there are a lot of key audit matters that can come up in listed entity. Obviously, since there are not many listed entities operating in this space as of now, I have tried to actually take out a couple of entities and just to, show you that what are the key audit matters that are prevalent in these kind of industries. So like we've discussed revenue recognition. If you see both, 3i Infotech, Happiest Minds and India Mart Intermesh, both these, they are both taking to their audit report. The auditors are taking the revenue recognition as a key audit matter. So like we discussed, the audit procedures around it, that obtain an understanding of the systems, controls properly, then, test the revenue recognition in accordance with India's 115. Test the management's calculation of estimation of if there is any cost or if any contract cost that needs to be capitalized, perform test of details, including analytical procedures, evaluate the design and implementation of internal controls, involve IT specialists wherever there is required and perform test of details, completeness and accuracy of web services, revenue, etc. Is important. One key audit matter I found in 3i Infotech is a tax position and a contingent liability. So like we mentioned again and again, I've been mentioning that there are a lot of related party transactions. So if you read the key audit matter, the company is subject to a periodic challenges by local tax authorities on a range of tax matters related to transfer pricing during the normal course of business. So when they are dealing with their related parties and they are not actually transacting at an arm's length price, so it is definitely is a key audit matter, and the auditor should take it very seriously and report appropriately regarding this. So there should definitely be the backing of a transfer pricing report, which should ideally the entity should actually be billing in the range that is mentioned in a TP study or a TP report. Now, moving on to some key aspects of audit documentation. So audit documentation should ideally mention the scope, the purpose of work paper, procedures performed, and conclusion. So when we are doing an audit documentation, why is it's actually important for multiple reasons. One is that, for somebody who's outgoing and somebody who's incoming new in the audit team should actually be able to understand what procedures have been performed, right? And if I talk about from an industry perspective, there should definitely be audit documentation around the entity understanding the environment, the risk assessment procedures that were actually performed for each financial statement area, what was the inherent risk, what was the control risk for each area, and what was the final risk of material misstatement. If there are any identified risks or if there are any significant risks. So identified risks are basically some risks that are related to some unusual transactions that you've seen in a particular area. For example, if an entity is, you've seen that year on year, the entity is not buying a fixed asset, but suddenly there is a lot of fixed asset buying in a company. So that can be an identified risk in the area of property, plant, and equipment. The processes related to each significant cycle of financial statement should be there, the walkthroughs for controls. So if an auditor is actually taking a TOC approach is that first the auditor is actually doing a test of controls, and based on that, they are doing a test of details. So automatically the sample size reduces a lot when you're doing a TOC approach. So if the auditor is following a TOC approach, the walkthroughs to see that whether the DNI, the design and implementation of controls is there, should also be documented, because till the time, so if I've done a walkthrough and if I've concluded that there is no design and implementation of controls, then there is no point of doing a control testing, because jab tak koi cheez designed and implemented in here, what will I test, right? So the walkthroughs are absolutely important from that perspective. Then controls that have been mapped should be there. Then the understanding of ITGCs, and like I've again written it, that it is the end responsibility of the audit team. Please understand this. A lot of engagement teams I have seen, I've been a part of that. Once the ITGC member submits the record, that record or that work paper is as it is attached in the documentation software, and the software is closed out, or it's archived, right? And then the next year when it is opened, you see that there are a lot of findings that were there in that work paper. So this is something that please keep in mind, that the end responsibility for any kind of ITGC, ITAC testing is with the audit team, the main audit team. Computation and the materiality, the why you have selected a particular benchmark, what percentage you have selected, should definitely be there. The working paper should tie out with the financial statements. Major customers should definitely be a part of your documentation, and accounting. So if, like we mentioned, that this kind of industry, there is a lot of talk about revenue recognition. There are a lot of models, different models. So any accounting opinion that you have taken for is taken by the company or the auditor, right? So both can take an expert opinion regarding any kind of transaction or any kind of a particular contract. So that should definitely be documented. Document in support of transactions with related parties which demonstrate the transactions are at arm's length price, right? So all related party transactions, all TP studies that have been done, all kind of department inquiries that have been done regarding this area should definitely be there. Working of any tax expert, if any. And then finally, there should definitely be a management representation letter that should be signed, where it should include a lot of aspects that, like all the documentation, all the contracts, etc., have been provided to the auditor for testing, and there is nothing hidden from the auditor. So that is actually very important to safeguard ourselves from the regulatory authorities, right? So thank you, everyone, for your participation. I think that was a quick presentation. Anilji, any questions if there are?
Thank you so much, sir. Thank you so much. Sir, how does documentation of such audit work? Relating to this, how much documentation relating to this audit work?
How much documentation would work? See,
how does documentation of
right,
such related audit is to be done?
Such related
audit is to be done.
Audit. So basically, so there is, so if I tell you, see, when I talk about audit documentation, it is not industry specific that the software industry will do this, or the healthcare industry will do this, or etc. So when you are doing a documentation, you just have to keep 3 or 4 important things in mind. One is that all your work papers are properly made, all the procedures performed, the reasons for performing those procedures, like we've discussed, have been mentioned there. The end result of those procedures have been mentioned there. The all important planning documents are available with you to keep it in your file. The understanding that you've done for the entity, any audit reports that you have obtained. So typically these, so if I talk about SaaS providers, they get their IT audits done on a regular basis. They get their the compliance audit done, etc. So those all reports should be there. Your materiality consideration should be there. Independence procedures should be there. Then, like we've discussed, all your substantive procedures, documentation should be there. So it totally depends on the kind of procedures and the kind of documents that you are using as an evidence. It's just that all the documents that you have used as an evidence should be included in your audit documentation file.
Yes, sir. So another question is relating to this only. Member is asking regarding the documentation, but specifically for firms under the peer review. For? Specifically firms under peer review. So basically, actually, when peer review happens, the audit is already done, right? So this question is actually not appropriate in a way that, so when I close an engagement and I sign a final balance sheet and the engagement is closed,
it is only then my engagement is picked up for a peer review, right? So ideally, as an auditor's perspective, by then your entire documentation should be complete. But again, I'm saying, if you have an expectation that, okay, this year the engagement that you are working on might be taken up for a peer review by an external party or even from an internal party, so you must ensure that the firstly that the plan, see, whenever there is, as auditors, we do not place reliance so much on, past that I have seen, we do not place reliance on risk assessment procedures or planning procedures, right? But trust me, when a peer review happens, when somebody external is seeing your work papers or your audit file, the first and the foremost thing they see is risk assessment procedures. What risks have you actually identified in your engagement? How have you concluded that whether those risks were significant, whether those risks were not significant, what controls you have tested around them, and how you have tested around them? So that is something very important from a peer review perspective. Then, of course, your substantive procedures and your work papers. Your work papers should not be vague. There should be nothing written in a work paper that would probably suggest that, some a procedure has not been performed. Everything that you have performed should be there in a work paper, properly, systematically written and documented, along with all the evidences should be there, right? So from that perspective, I think this is very important for a peer review. So the start has to be absolutely critical from a peer review perspective. When they see your audit, the planning, 90% of the engagements I know fail there itself.
Yes, yes. Sir, one more question. Will you also not consider whether the software used is already end of the service life, wherein support from OEM is not provided?
Come again, Anilji, एक minute.
Will you also not consider whether the software used is already end of service life, USL, wherein support from OEM is not provided?
So what I have understood, basically, I think the question is that will you also not consider whether a software is at its end of useful life, right?
Yes, sir.
Right. So of course, we will definitely consider, absolutely. So that's what I'm saying. So when you are doing impairment assessments or when you're doing writing of assessments, it is absolutely necessary to evaluate. So let's say if an entity has developed a software and is providing services, but the technology has now changed and that software is no longer used or relevant in today's time. So obviously users will not, will move on to something else, something bigger and something better. So when you are doing that assessment, so either you should see that whether how the entity has actually evolved around that technology, whether they have integrated that technology. Like we know, like everybody knows the case of Nokia, right? Nokia was the king at one point of time, but they did not evolve with their times and they did not bring in Android systems. They did not tie up with Google, and everybody knows now where Nokia is. So definitely when the software is at its end or the users are decreasing, that is a trend which should ideally indicate the auditor that there is a going concern risk. There is a risk of closing down of this software and they should ideally impair it or write it off, as the case may be.
Yes. So thank you so much, sir, for your nice and detailed deliberation. Once again, thank you so much on behalf of WSB of ICI for spending your valuable time, and in spite of having family exigencies, you are here and you have deliberated on this this very important topic. On behalf of WSB of ICI, I extend my hearty thanks to you, sir. Thank you so much, sir.
Thank you so much, Anilji. Thank you so much to all the participants and AASB board for giving me this opportunity.
Thank you, sir. Thank you. Thank you.